Thank you for joining me today. I got Jamal Mack from UWM, the number one wholesaler mortgage company in the United States, maybe even the world. What's up, Jamal? How are you doing today?
Mike, my man, it is awesome to be here. You know it, man. I appreciate the time, man. I'm looking forward to getting into it today and talking to everybody here about how we can win together.
Yes, I love it. Today we're going to be talking about investment loans, and one of the best investment loans or most popular ones are called DSCR. Now, can you explain to us in simple terms what a
Mhm.
DSCR loan is and how and why investors are using them?
Of course. So the DSCR loan, also known as the debt service coverage ratio loan, basically says that all we're going to do as a lender is we're going to look at what you're charging in monthly rent, ensure that that's enough to cover the mortgage payment that you have per month. And if it does, we'll basically give you all the money you want for the property in order to lend on it. So you can have that property and use it for your rental income.
Okay, so how does this kind of like people are so used to the traditional mortgage, right? Conventional loans, get me
hmm
approved, use
hmm
my income, do all this stuff. What's the difference between like the conventional loan versus this DSCR?
Great question. So it all comes down to what we're qualifying you on. On a conventional loan, typically we look at a borrower's income and their debt to income ratio. So we're using those factors in order to say, okay, here's how much money we're willing to give you based on the risk factors that your income presents and how much debt you hold. However, with the debt service coverage ratio, we do not look at your income. We do not evaluate you off DTI. We're just purely looking at if you're charging enough monthly rent to cover the mortgage payment. If that's the case, you got the green light from us and we'll get that property.
Oh my gosh, so this sounds too good to be true. So you're saying that you're not even qualifying me on my income that I personally have, just the
hmm
income from the property itself.
Exactly. We are not concerned about how much money you make from your day job or your side hustles. We just want to know if you're charging enough monthly rent to cover the cost of the property per month. That's it.
So as you calculate this, how do you calculate whether or not you're bringing in enough income?
hmm
Is it just by the mortgage? Are there other factors that have to be calculated in this
hmm
kind of ratio that you're talking
Yeah.
about?
So great question. So we're looking at the pity of the mortgage payment, right? The principal, the interest, the taxes, and insurance. And we're going to use what's called a comparable market rent schedule. So basically, just like how you look at comps for a home, we're going to look at the rental incomes for homes in that area to make sure that one, you're not overcharging your borrower, and two, make sure that the home is actually profitable for you. So we're going to use that to determine a general rent number, and you can fall in between the range, right? So let's say if you want to charge anywhere between 1,000 to 1,400 bucks for rent, as long as that range meets the comparable rents in the area, you can charge whatever number in between, and we just make sure that it's profitable for you, and we give you the okay to do the home.
Awesome. So at UWM, you guys do a ton of loans. What do you think is yeah, I don't know, I want to say on average, but what portion, a percentage, are you guys doing these DSCR style
hmm
loans that you guys do in-house?
So as of the past 4 years, we've actually become a staple in the non-QM world as being the largest non-QM lender, right?
Wow.
With just about, the majority of that non-QM space is occupied by DSCR, debt service coverage ratio loans. So if I had to put a percentage to it, I would say out of the non-QM loans we do, it's at least over 50% of the business, the book of business that we have in the non-QM space.
Wow. So this is a very popular product that you guys, basically push out. Okay, what is the
There.
typical, let's say, like the investor profile? Who is this good
Mm-hmm.
for? What type of investors should be looking at DSCR as an option for their next funding uh, on their loans?
Well, that's a great question. So there's really no perfect profile, right? But we'd have to make sure that you have at least over a 640 credit score, if not right there or above. And I think one of the beautiful parts about it here with that profile is you don't necessarily even have to have a tenant. So you can be an investor where you haven't even found a tenant yet, and we'll
Oh,
still give you the okay. Yeah, we'll still give you the okay and green light on that property. So as long as your credit score is, like I said, above that 640 mark, you can own many properties. You can not own any properties at all. it's still a good fit for you as long as we get that ratio covered.
All right, so you went down this path. You started talking about like, hey, we can get you approved without even having tenants
Hmm.
in. So what type of documentation or what type of qualifications need to happen for something like that to get approved?
Yeah. No, great question. So, like I say, we're going to look at that comparable market rent schedule, right? Now, obviously, it'd be ideal to have at least a lease agreement in place. That way, you got some type of documentation to show what this person could be held to, right? But at UWM, I mean, like I said, man, we're just going to use that DSCR ratio, and if you don't have a tenant, you can put what's called unleased, right? You can register the property as unleased with the hope that you'll have a tenant soon. And like I said, we'll still lend on the property for you.
All right, what common mistakes do you see happening in the DSCR space that maybe,
Mm,
future investors can like avoid so that, getting into this type of loan, they say, okay, look, here's some things to be aware of and to kind of keep an
mm,
eye out on.
yeah. So the biggest mistake I've seen is people not doing their research on the property that they're looking to occupy. So you can't just necessarily come up out of nowhere, thin air, with the number, the amount of rent that you want to charge per month, right?
Mm.
You have to do some type of research to see what the comparable rents are in that area beforehand. Because I've seen it before where somebody's came in and said, "Hey, we want to charge 3,000, right, for rent." Well, the comparative market rent schedule only allows you to go up to about 2,200, and because you didn't do your research ahead of time, right, that sets you back in your qualifications. You told the borrower they were getting one rate, but because of the fact that the ratio doesn't work out, they're going to get a higher rate, and now you have to have a tough conversation, right? So that's the
Mm.
number one thing I've seen is people not doing their research ahead of time for these properties.
So even though let's say the property, let's say you have a tenant in there that's bringing in $3,000, but your comparative market value, like you just said, is 2,200. Do
Mm-hmm.
you do you go backwards, or because the money that's coming in is there, do you accept that as rental income?
So if you're already generating that income, we're not going to necessarily say, hey, you have to charge less. That's not our place, right? Especially if you already have that agreement in place and everything, you're good to go with us.
Okay. All right, great. Well, let me ask you this. What's the craziest deal that you saw come through your desk? And you don't have to go in specifics, even if you're allowed, right?
Uh huh.
But what
Mm-hmm.
is like the craziest thing that you've seen in this area?
So to be perfectly honest, right, it's crazy in a good way. It's crazy in a good way. I had an 18-year-old who literally did 15 DSCR properties at one time.
Wow.
18, man. The guy is 18 and already secured 15 rental properties at one time.
Oh my gosh. So how does that
So
even look like? So you're telling me he
yeah.
had 15 properties lined up and he said, "Hey, I'm gonna
Hmm.
close on all of these." What, I
Yep.
guess, so we understand what qualifies you, the ratio. What does
Hmm.
the borrower or the investor have to bring to the table to get one loan or even 15 loans
Hmm.
approved?
That's a great question. So when it comes to something like this, obviously you want to make sure you have a good down payment, right? Most DSCR products are going to have you bring in at least 20% to the table, right? But one of the main reasons why this young man was able to have 15 properties is because with us here at UWM, we have a product where we actually don't have a minimum loan amount. Okay. So most places you go, they're
Mm.
going to have a DSCR ratio or a minimum loan amount requirement of 100,000 and at the least 50,000 from what we've seen. We have a product where you don't have any minimums. So he was able to close on a couple properties that were less than 50,000, a couple that were a little above that. So he didn't have huge down payments to put down on a lot of these properties, right? So you have your down payment, and obviously you have your small closing costs. So those are just the things you want to keep in mind. It's just like closing on a normal home. You still have your down payment. You still have your closing costs to worry about. You still have to pay for the appraisal for these things. So normal costs when it comes to doing a mortgage transaction.
Oh, so you're saying UWM has no minimum? Because listen,
Mm-hmm.
you're from Detroit, I'm from Cleveland, and I could pick up a
Mm-hmm.
house down the street for 15,000. You're telling me that
Mm-hmm.
UWM will do a deal with me for 15,000 on a
That's correct.
DSCR? Wow, that's nice. All right. So
And
okay. So those are all the great things. Tell me, what is there any? Um, I guess maybe we went over like the mistakes, but like if
mhm,
I'm new to investing, right? What should I be thinking about as far as is, because you said there's no minimum,
mm,
but should there be some type of property I'd be looking at? Is it single family? Is it duplexes?
mm,
Is it,
yeah.
what is the minimum you guys allow and what is the maximum as far as units that I could be going
Mhm.
with UWM?
So that's a little bit of a two-part question, right? So to answer your second question first, we have a maximum of 4 units. Okay. Now to go back and answer your first question, I've seen it be a lot more profitable when you look at a multi-unit property, right?
Mm.
And as a matter of fact, even Fannie and Freddie are emphasizing more discounts into the pricing when it comes to multi-unit properties. So what that means is for your investor, for your borrower, that means lenders like myself, we look at that and we say, okay, we're going to give you discounts as well in these investment properties because that's the direction that the industry's going, right? So you
Mm.
invest in multi-unit properties, you're going to see more discounts there in the pricing for you, which is more advantageous. Now, to answer your question as well, when you ask, what to kind of look out for, when it comes to this, I think one thing that you can use in your advantage and you kind of want to think about as an investor is, do you want to have a prepayment penalty, right?
Mm.
Which boils down to how long you're thinking about keeping this property, right? So when you look at those two questions and those two things, if you're thinking about keeping the property long term, it might be wise to have a prepayment penalty because it gets you a lower rate up front, right? And however, yes, it will come with the fact that if you do some transactions, if you sell it early, you will have to pay on it. But if you plan on keeping it for 2, 3 years, which most investors do, why not go for it? It makes your rate cheaper, get you a discount on your closing cost, which means you can have a cheaper monthly payment, right, for
Mm.
yourself, which means you increase your profit margin every month.
So why wouldn't people want to put the prepayment penalty, and how long are these prepayment penalties determined?
Hmm. So that's a great question. I think sometimes it actually comes down to the education on it. There's a lot of misnomers about prepayment penalties, and there's a lot of negative connotations to them. But I will say this: if you are unsure about the duration of how long you want to keep your property, it may not be in your best interest to do a prepayment penalty. There are some investors where you're doing 1 year and you keep it and you flip it or whatever you do. That may not be the right fit for you. There are prepayment penalty options for 1 year all the way up to 3 years. But what I would
Mm.
advise for every investor is take a look at your state specific requirements to ensure that you can put a prepayment penalty on there for one, and make sure there are no overlays for your state to make sure that you can't put any, there are no limits on the years for prepayment penalties that you can apply for your property.
I guess that's a good question. When it comes to DSCR loans, are they good all across the United States or only good in certain areas?
Oh, that's a great question. Um, hmm. So yes and no, right? And I hate to give you that in between answer, but so I would say for any loan officers out there, it's good because you can lend on and find lenders for this property. You don't have to be necessarily licensed in some states. There are about 35 states that you don't have to be licensed in order to do a DSCR loan, right? So I think that's advantageous there. But on the other side, there's the no portion because it all depends on the population of the market that you're looking at, right? So,
Mm.
like for Detroit, for example, a great place where a lot of people are coming, a lot of outside investors are coming in, buying property, investing in these, and doing DSCR ratios. However, right, the drawback is there's some communities that they're investing in where they're thinking their rate or their ROI is going to be higher than what it is, but
Mm.
because they don't know the space that they're operating in, they're in for a big shock, right? So you
And
got to be careful when it comes to that outside the market, outside your own state type of investing.
And I think that's where you said earlier, you said you have to do your due diligence and your homework and really
Mm-hmm.
understand the market that you're getting into. Okay, great. We talked a little bit about multifamily units. Um, is there a difference between a DSCR style loan and someone occupying the premises? Like I live, like say we do the 4 unit and I live in one
Mm-hmm.
unit. Is that allowed with the DSCR or is that a different style of loan?
Hmm. No, that is allowed, and you can do that. And there is what's called owner occupied, and you can actually do that, and you can kind of, it's not you're not separating the units, but it is possible to actually have a transaction on that multi-unit property. Correct.
Okay, great, great, great. So if someone's looking to buy their first property, they're getting into investment loans, what are some of the steps that are the first steps that they need to do to even qualify for a DSCR loan?
Well, one of the things that I mentioned, which is very important, is your credit score.
Mm.
Ensure that your FICO is as high as possible, because what happens is not just us as UWM, but every single lender builds in extra pricing adjustments that make your loan more expensive the lower your FICO is, right? So traditionally, what happens is every 20 points in bump after, I know for us, after about 640, you'll see less and less of those adjustments all the way up until about 720. So the higher your FICO, typically the more forgiving you have a DSCR ratio, which means your ratio doesn't have to be as high. The higher your FICO, and typically with that, that means you're seen as a less risky borrower, right? A
Hmm.
less risky investor. So the lenders are willing to take a little bit of a step back when it comes to making your loan expensive to make it more affordable for you. So I think that's the main thing. And as we just go back to the research thing, man, you have to know your market and your property. You have to. You never want to go in there making a blind investment because a property looks like, and you see it devalued, right? You definitely want to go into the community, talk to the neighbors, talk to the local chamber members if you can, right? And get a sense of that community first before you just go in there and buy a property and thinking that it's going to yield a whole lot of income for you.
Awesome. And as we wrap up here, UWM, how many products do you guys have when it comes to making it fit for the right person for these
Hmm.
DSCRs? And maybe, just touch base quickly on what they are.
Yeah. So we have about four different DSCR products, right? They all range based on their different qualifications. Like I said, you have some where there's no minimum loan amount, no DSCR ratio required. You have some where they're a little more strict, and this is for the investor that's got a little bit more experience, right? Where they built a book of business. We're not necessarily going to look at any of the properties that you have. For the guy that has 10 or 15 investment properties and doesn't necessarily want us to even take a look at those, right? There's a product for that. There's products for first time investors, right? So, which is something that you really don't see too often. A lot of people, they want to stay away from first time investors. We have products for that. We have products with low minimums, 50,000, right?
Mm.
Like I said before, some at 100,000. We've given a break on the FICO where most DSCR products you need at least a 680, right? We go as low as 640, which is one step above your conventional requirements typically. So there's a lot of flexibility there, and all our products are just based on the different investors that are willing to give the money to do so,
Mm.
right? So I would always urge that person, that investor, to get with somebody like yourself, to always kind of look at their options and see what's the best product for them before they bring that loan in here, right?
Well, listen, I think that wraps this up. I appreciate you, Jamal Mack, number one AE in my book, and UWM going straight to the top. I'm excited to have you. Thank you for all your knowledge. I appreciate everything. And that's it, man. Thank you.
Oh, Mike, I appreciate you having me on, man. I hope that this helps not just you, but everybody that tunes in and watches, man. I can't wait. I'm expecting great things out of us, brother. So I
I,
appreciate you.
I appreciate it. If you are looking for a DSCR loan, my link is in the bottom here. You can click on it. We can start the application right away and get you approved.